Hello, this is Jordan, and this video is being recorded on the evening of Tuesday, October 22nd, 2019. And in this video, I'm going to discuss the number one thing I look for when I'm researching exploration companies. Now, before I get to that point, I have to first give this some context. That's why I'm going to discuss the life cycle of a typical junior mining company, from discovery until production. So this would be the life cycle of a successful junior mining company. Now, note that this applies to most junior mining companies, but not necessarily all junior mining companies. I mean, there's some that can make such a great discovery and that can immediately be put into production in only a couple years, and you don't need to do years of studies and engineering and all that because it's so high grade and it's such a fantastic discovery. But that's not the norm. So I just wanted to make that clear. Now, from looking at this chart, and I discussed this in my book, there's basically 2 points, only 2 points in the cycle where we want to be a buyer. And that's first, it's during or prior to a discovery being made. And then the second time is during the construction phase. Usually that point is anywhere from a couple months to 5 or 6 months before a company successfully reaches commercial production. That's the point when the market starts to recognize the production that's going to come in the months ahead, and when the stock starts to outperform, relative to the sector. Now, the development phase there in the middle, which is basically feasibility, as you can see on the chart, during that phase, there's very important work that goes on. There's financing, there's studies, there's more drilling that goes on. But unfortunately, that's the stage where the typical successful company has its worst performance. So we really want to avoid that phase, and companies that are in that phase for the most part. It's not a foolproof argument, but just generally speaking, we're talking about most companies here. Now, today, we're focusing on the exploration companies, and so the exploration and discovery phase. And one question we have to ask ourselves is, with respect to exploration, do we want to focus on pre-discovery or post-discovery plays? Now, for me, I personally prefer to look at post-discovery plays. Now, specifically, that means that I'm looking for existing discoveries or existing deposits that have significant growth potential and or additional discovery potential. That's the biggest thing that I look for. Now, as an aside, you'll hear lots of people and conventional wisdom talking about, the people, find the best people. That's the most important thing. And of course that's true. We want to find competent people with experience and a track record. But those people cannot turn a crap asset with little potential into a billion-dollar mine or $1 billion project. It's just not going to happen. So that's why I look at the asset, and again, my number one thing is looking at an existing discovery or an existing deposit that has significant upside potential. Now, a few reasons why I look for that is because big discoveries are not instantaneous. A 10 million ounce deposit or even a 5 million ounce deposit, that isn't going to reach that status overnight or after a single drill program. It can take a few years and a handful of big drill programs before an initial discovery hits its peak. Now, also, odds are more likely that an existing discovery grows into a very large discovery than something at the pre-discovery stage, just going from zero to a massive discovery. I'm not saying never buy pre-discovery. I'm just pointing out the differences and why I prefer to look at post-discovery things. Now, finally, think of a discovery and the growth of that discovery as a wave. And so as speculators, we want to ride that wave. We want to get on board the wave early, and then as the wave forms and looks like it's going to develop and get larger and get larger, we want to stay on board and participate in that growth, and of course, eventually, take some profit and exit the wave. So these are basically my thoughts on why this is what I look for in exploration companies. Again, I'm looking for something that it's a small discovery or it's an existing deposit, it's something like that that has significant upside and growth potential. That's the number one thing that I look for. Now, if you like this video, you can subscribe to my channel here on YouTube. You can also follow all of my work at thedailygold.com. If you haven't done so already, opt in there for my book. I am going to be doing an update at the end of the year, and also consider checking out my premium newsletter. It's highly affordable, thedailygold.com/premium. And if you want to know which juniors I'm researching, which juniors I own, which are the ones that I'm looking to buy here in the short term as this correction matures, and consider subscribing to our service. I thank you again for listening to this video and watching. I hope you found it informative and helpful, and I look forward to publishing another video update for you guys in the days to come.